Greetings, everybody. This is Jeff Scott, and this is my weekend market update. I'm playing around with different ways of doing this. You'll notice one thing different today is that this is an Excel instead of a PowerPoint. Only the first slide's blurry, so don't worry about it. I titled today, Are We About to Enter a Bear Market? It's March 6th, 2022. My email address is htsIdoc@gmail.com, and I welcome comments, remarks, either within YouTube or to my email. Big event coming up, April 4th through April 9th, the Wealth 365 Summit. These are great programs. You have an opportunity to buy things at discounts, such as the Wealth Charts platform. Lots of different people will be speaking. And as of right now, I anticipate I'll be launching my fee-based marketplace indicators and education program. You can register for free. Here's the link. www.summit.wealth365.com/Dr-Jeffrey-Scott. I'll put this link in the YouTube comments. Disclaimer, this is for education purposes only. Anything I recommend in the spirit of education should not be considered investment advice. I am a doctor, not a broker. Tools I demonstrate are those that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I want to start here by looking at major indexes. This is just a snapshot from HGSI. And we can look on the top at the performance for the week. If you look at over 5 days, semiconductors got slammed. Nasdaq 100, Nasdaq Composite led to the downside. The strength was in the AMXY metal, miners, oil, as in the utilities. If we look down here, I want you to look at the percent current interval from the 52-week high. So the Amex and the utility, Dow Jones Utility, are at their 52-week highs. You can see both of them were up 5% on the week. The other thing up on the week was transports. You can see semiconductors is down 19.8. And the reason for my comment about are we about to enter a bear, Nasdaq's down 17.9, 17.5 on the Nasdaq 100. The S&P 500 is down 10, the Dow is down 9, and the Russell 2000, the small cap 600 that we used here for small caps is down 12%. I think the Russell's down a little bit further. So you look at that, and what you see is markets that have been under pressure. If you look at the days since the 52-week high, I mean, take away the zeros, are the two things that are potentially contrarian based on what's in them. And you could see it's been 2 months on some, up to 4 months on others since we hit highs. Tells you the weakness that we have is not something that just occurred. If we look at the Nasdaq, and this is a snapshot from EdgeRater, and I'm looking back 10 days, no evidence of a Hindenburg omen. Here's the same slide I just showed you here, just showing you 17.9% off the high. Notice the new lows, and we're getting back. We had a couple-day rally starting on the 24th, and now we've gone the other way. And you can see the new lows are increasing, and the new highs are very low. And you can see the advanced decline line is getting more negative. Over on the right are things we haven't talked much about them. The bingo's the baby out with the bathwater. The Eureka is a follow-through day to the upside. The Phoenix is a follow-through day to the downside. And the Kahuna, which I already used within one of the indicators in Wealth Charts, includes the Kahuna. It's just a big move. It's a percent B change, more than 24% in 1 day. So look at the NASDAQ, all new lows. Now you look at the NYSE, and you notice you've got lots of new lows, but also new highs. The AD line is much more neutral here over the last week. So a difference between the NASDAQ, which is tech, biotech, and obviously leading to the downside, and the NYSE, which had two kahunas, which are bullish, and did have a Phoenix, a follow-through day to the downside back on the 22nd before the reversal day when the war started. I thought that was very interesting, and you could see that the NYSE is only off 7.5% from its 52-week highs. The bucket's also interesting in that you look at this, 55% of stocks in the S&P 1500 are trading below their midline, slightly bearish. But look at this. You've got lots of stocks below the bands probably the tech stocks and some of the beaten up growth. And you also got 11% above, which are probably miners, gold, oil, etc. It's interesting how this market is bifurcated. Now, what really is mind blowing, and I want to just take your beady eyes down to coal. I thought coal was dead. Who cares about coal? Coal miners. You know, the only thing we care about coal is Senator Manchin's from the coal miners state of West Virginia. But look at coal. It was up 13.18% on Friday. Natural gas up 28%. Then you look at year over year. Natural gas is up tenfold. Coal's up 377%. Yeah, we're all commenting about how amazing oil is, especially since oil was negative, during the COVID crisis. But on the year, oil is up 75% and coal is up 377. I have some coal stocks. It killed me to buy them, to be honest with you. But boy, this is the most bizarre market I have ever seen. Obviously, these are war related, and one might expect these things to suffer if the war goes away. Not that it seems like that's going to happen. On the metal side, you can see gold is up a healthy 15% over the year, copper 19.83%, and look at lithium. No wonder the craze on Albemarle early in the year and other lithium providers. It's up 600% year over year. I saw an interesting news show about something in Southern California where they might be sitting on enough lithium to make us not dependent on China anymore. But there's no question, if there are bull markets, no matter how bad the market feels, and it seems like the bull market here is a lump of coal, some natural gas, and a lot of metals. Even steel is up 11%. Although you look at some of the steel stocks, they seem to have had a bigger move. Economic news this week, I think the key for me is going to be not just the jobless claims, but the CPI on Friday. This comes from Econoday. I think it's one of the best presentations of what's going on news-wise. And when it's a red dot, it's more meaningful. And then green dots you want to pay attention to as well. The natural gas, petroleum reports. We'll talk about petroleum in a second. We also have another giant earnings week. You can go through, you got some tech, you got some electric vehicles, you got some retail. For me, I've got Zim, although I've got a collar on it, at least a puts on it. And I've sold calls against most of my things, but they're out of the money. So you need to know when your earnings are. Market thoughts very quickly. Be careful. There's a war out there. News will drive the markets. I know oil's up big right now it's pre-market. It's still Sunday night. If this war ends, the bottom may drop out of gold and energy. If the war expands, God only knows what gold and energy are going to look like. Therefore, it's probably prudent to have a position in them. But as you think out 3 or 4 months, you have to wonder, will oil really be where it's at tonight? We also have some issues that Iran oil, which has been blocked from the market, might come to the market and ease some of the supply concerns. Now, don't forget, we still have inflation with or without the war, so a lot of the metals were already on fire, a lot of the ag stocks, commodity stocks. The CPI this week will be interesting. I said that it's number 5, it's no time to be a market hero. Small positions, less positions, tight stops, maybe a mixture of long and shorts. I'm nibbling on some energy profits. If we gap open on oil tomorrow, I've got Fang, I've got Halliburton, I've got Baker Hughes, I've got Ecopetrol, I got Schlumberger. I've got a lot of energy-related positions. I'll probably start to nibble or put some puts at the money because I think at some point you're going to see the market turn around. Just don't know when. And then defensive sectors now. But if and when the war ends, I look for tech and other things to come back in. If you watch these videos, you know I've been cautious going back several weeks, months, and that all we've been talking about have been strength in agriculture, CF, Mosaic, IPI, oils, too many to count. We've mentioned coal. We've mentioned ore stocks, steel stocks, copper stocks. My best account, that's what's in them, all commodity stocks. Now, of course, if I'm not nimble when those things go, I'll get clobbered. But right now, that account's doing very well. Again, just to remind you, the Wealth 365. Let's take a look at wealth charts at what the market is. And I could just skip and stop right now because if you think this is a market where I'm going to give you 100 stocks to buy and be a cheerleader, not the right market. But I can talk about the market. You can see on let's look at the spiders to start. We broke through the channel. Somewhere here, we could probably draw a trend line. Maybe this trend line looks like this. We have failed this trend line. We have the risk, we're going to test the trend line here on Thursday rather, and we sold off on Friday. This is the January 24th lows, which we took out intraday on February 24th, the big reversal. Interestingly, I did get an early market buy signal came in, and it's called early for a reason. We've gone sideways since it fired. And if you look at Friday, we opened down, we closed higher than we opened, big bottoming tail. You get the sense that, are we in a downtrend now? We got lower lows. We certainly got lower highs. So this is not a bullish market picture. At some point, you're going to bounce. But as far as I'm concerned, we're in a downtrend now on the spiders. If I look at the Qs, not sure I'd say anything else because I think, just get a trend line tool here. And put this thing down here. Take this somewhere up here. And I don't know where, I'm not the world's expert on drawing trend lines, but you're probably looking somewhere like this. And we failed the trend line. We're in a downtrend, okay? Not much more to say. You look at the diamonds, the same thing. The Russell actually stronger a bit, but it too failed on the way up. The VIX is up way off where it was. This is the VXS I like looking at. It's come up from the 17 range to 26, but it hasn't done the VIX massive up move before it rolls over yet. So that's bothersome. And then no surprise, fight to safety, the dollar is extremely strong. The gamma chart's not much to spend, except I did mention we had the EMS signal fire on the market ETFs, but I can't say anything bullish about this except we haven't closed below the January 24th low. If you're wondering why you don't show penetration like we did on the candlesticks, that's because this is using closing prices for the line chart. If I look at commodities, you see what you want the stock indexes to look like. Look at gold breaking out. Now, interestingly, this is weekly, and I did this because where it closed on this dotted line is kind of where it peaked back here in December 20 and then back here in November of 20. Up here would be the peak from August of 20. So, we could see some resistance in here, but we know we're not if you look at the futures just because of the war. Volume coming in, hopefully you've got some gold stocks. Oil, this is, Ian used to talk about climax runs. Look at the range in oil from when it got down to negative, in the March lows. If only you knew that only cost about $1 a month per barrel to keep it on a tanker, and you had money, imagine what you'd be sitting at today from negative 20 to positive 79 in the USO, 125 or so on a barrel price. But this is a climax run. It's a climax run. You can see it's almost vertical, clearly being driven by the war, supply concerns, the fact that we don't have tons of assets in this country that can be turned on. Silver, not quite. as high up in the pattern as gold. Yeah, it's pretty close though. You can see that silver was quite a bit higher back here in February 2021. You can see here natural gas. It hasn't moved as much in this country as it has ex-US, but look where natural gas is. You know, if you go back since December, it's up 50% or more. That's a pretty incredible move, isn't it? And then down here, the bonds, sort of a flight to safety play, I think, on Friday. Market theme, it looked for a while that the IWB versus IWM ratio chart was favoring IWM, but at least on Friday or the last couple of days, the big stocks took control. If we look at the hourly chart, you can see much better how the big stocks, so if it goes up to the right, upper right, it's big stocks, lower right, it's small stocks. So big cap growth, if it's to the top, value to the bottom, it's pretty easy to see that volume is leading. And if I go down to hourly, you can see, again, we had a little bit of a tease starting on the 24th of February and running until the 28th, suggesting that growth was back. But this is a large cap value is what is the theme. If I look at the hourly sectors, ratio charts sort of normalize things. Defensive, utilities, up. Healthcare, interestingly, up. Real estate, heading up. Staples, up. Industrials, up. Energy, up. Materials, up. What's doing poorly? Communication, financials, technology, discretionary are leading to the downside. So defensive sectors are leading. Now, if we go to the wealth scanner and I put down my top-down indexes, ranking by bullish, you can see we have commodities, metals and mining, gold, oil, gas, the dollar, oil producers, XLE, gas, utilities, dividend payers, TBF, so short bonds. Interesting. If I look at what's not working, yeah, I mean, Kathy Wood. I mean, she takes several of the top spots. So high cap, high growth stocks are out of favor, and her ARC Innovation's been hammered. You could see that the IBB Biotech and Fang also doing poorly. If I drop down and take a look at the sectors real quickly, that should match up what we've already looked at. So I've got here their S&P 500 sectors somewhere. There they are. And let's look at from the bullish perspective. And you can see energy, utilities, staples, healthcare, real estate. We have another word for these. Take out energy and their defensive plays. And I think energy, we know why energy is up. All right. Now, what I like to do here next is I typically go into the sector scanner and I take a look as I usually do. And for the essence of time, I'm not going to go through the whole exercise. I'm just going to show you what I do. I rank by algo score. I take the top three. Okay. I compare, rank by algo score. I take the top 10, 15, whatever I'm thinking. I'm holding down the shift key. When I click on this one, they highlights them all. Then I'm going to compare. This brings up all the stocks in the top groups. And what do you see? Aluminum, gold, 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 gold. Do we think gold is doing well? You got some coal and other things in there as well. So what I do is I basically take these and usually go down to 750 on the bullish side. I'm just going to work you through what I did and then talk about the rest. Shift key, hit P10, all of them are there, add to watch list. And I just put them probably in the wrong watch list because I've already done this, but it doesn't matter. I build my bullish and my bearish watch list. Obviously, that was a bullish. Another thing that I might do is more bottoms up. Take a look at all of them, compare all of them, compare, and then take from all the industry groups, the top 50, 100, and put them in a list. I could do it in the same bearish. Suffice it to say I've got a weekend bull and a weekend bear list. Now I can go back into my wealth scanner and I could drop in my weekend bull list and see if anything looks interesting. So it's going to take a look at the stocks, apply the score, and we could start looking at what's there. Many of these are stocks that we've talked about before. Next year, oil fields, this thing has run quite a bit. Grand Tierra Energy, and we're going to look more at charts in a second. So one could just go through and start looking at the top stocks there. I can see some that are on my list. And for example, one that I've got some that I have to figure out what to do because this is Peabody Coal, and you can see Peabody Coal is in a climax run as well. I could look at my bearish choices, weekend short review, make that bearish, and see what comes to the top, get a sense of what I would be looking at for things that might be weak. Takes a second to run. It's a big list, especially since I just dumped more stocks in there, probably by mistake. And we could look at some of these stocks if we were looking at potential shorts. One of them, Adobe, is one that is breaking down and failed its 17-day moving average. I know that's on my shorting list. So that's one way to approach the market. What I'm going to do is use my scanner, the CAT scanner, and I'm looking at the weekend review. Let me show you the settings. This will be available, I believe, during the Wealth 365 event. My price, I'm not looking for whether you have an EMS signal or not. I'm going to leave that alone. You got to have at least one bullish dot, and I don't want you to have more than one bearish dot. I want you in a squeeze. I want my Bongo Weekly bullish, which is going to be limiting right now because a lot of stocks are in downtrends, and this is looking at the longer time frame. And your EMS is going to be bullish or no signal. I don't want bearish stocks. These are the stocks from that very big list of about 1,500 stocks that comes right up to the top. Canadian National Railways looks great. Clear uptrend on the weekly, pull back to the 50-week and bounced. And if we look over here, let's make it smaller, we can see uptrend, pull back, been basing, in a squeeze. Remember my dots, the top dot, I've got 4 dots, that's dot number 2. Dot number 4 is a big gap up. Dot number 3 is big volume. Dot number 2, which is this one, is a breakout. And dot number 1 is momentum. So this has a squeeze, a recent PSAR reversal. The daily bond goes up. It had both a wealth signal and an EMS signal, and it's breaking out above the moving averages. CVE, this is an energy play that it's run a long way, but perhaps it's not as extended as the others. Little pullback flag, breaking out again with 2 balls, momentum and a breakout. Dominion Resources, I believe this is a utility and not a typical traditional, not an oil and gas company, breaking out. Now, one thing I often do is I like to sort by number of dots. FET, Forum Energy Technologies. I like the weekly to give me a sense of the longer term trend, and it's kind of been, it must have really sold off at one point. But you could see here, it's really not doing much attractive. It's sideways at best, although it did take off the 50 weekly. I've got a wealth signal, I had an EMS, and I've got volume, breakout, momentum from a squeeze. That's interesting, I guess. ZGNX is a buyout. Canovus Energy, also an interesting play we talked about before. Molina Healthcare, some of the payers looked interesting. You can see here you'll have, when it finishes loading, you have momentum and a breakout from a squeeze. Notice in all of these, this here is a relative strength. Sorry, sorry about that, of the stock versus the S&P. And the greener line is the moving average. So these are breaking out above their moving average. NOV makes docks, oil platforms. No surprise, you drill when prices are high. And this used to be a $100 stock. Again, breaking out with 2 dots from a squeeze. Now, if I wanted to look at the bearish plays, I might change. And what I might do is I want bullish dots to be less than or equal to 1, bearish dots greater than or equal to 1. I'll leave you in a squeeze. I want my Bongo weekly to be bearish and my EMS to be bearish or no signal. Now, we go to the bearish list. And you could see a lot of stocks made it to this list. ASX, this is an ETF. I picked it because it's got a brand new EMS sell signal. It's breaking down. It's got breakout volume and momentum, PSAR reversal, out of a squeeze. I just don't like to short cheap stocks. Let's go in here and let's put price greater than or equal to, say, 50. Let's hit apply. Still quite a few stocks. It's ranking by price. Lattice Semiconductor. All right, this is what I like. This is kind of how I like to pick my shorts. I've got a stock that was in a squeeze. It had 2 red dots, a PSR reversal to the next side. You have the relative strength versus a moving average breaking down on both the daily and the weekly. On the daily, we have broken down below the 50, the 200, and the 17-day moving average. And on the weekly, that was the daily. On the weekly, we've dropped below the 50-day moving average. I'd rather short on retracements up to the moving averages, which is what we have here. And this, if I was picking a stock to short, would be high on my list. What else do I think? On Semiconductor is another one. Similar pattern in that it's traded back up to the major moving averages. It's still above the 200, but you have maybe 20% move possible. That's why I like expensive stocks. They can really fall. Haven't looked at Cirrus Logic, but it's in that semiconductor complex. I'd rather see it clear the 50-day moving weekly average before I start shorting it. But that's how I approach this market. I'm looking for stocks that are in a longer-term downtrend, hence the weekly Bongo is bearish. I'm looking for stocks in a squeeze, so they're building up energy, so when they break, they can break. And I'm trying to get an edge on the direction by looking at my dots. This week, I think you need to be careful, as I said before, and just to look at a couple of ETFs. Well, here's that BTU I mentioned before. It's not an ETF. And again, why do I like my dots? When I start to see this pattern here of multiple dots in a day, I pay attention. And then right here, you had an EMS signal. You had a wealth signal. You broke above the moving average. And you're off to the races from 1223 up to where we are today, which is 29.35. As I've looked at stocks for a long time, the pattern seems to repeat itself. Yes, this is Rob's famous looking for throttling in his triggers indicator. I was doing the ITP course or program this week, and I added it. It's one of my favorite indicators, but that's another time for that story. So if you look at the ETF for coal, if I remember correctly, actually, that's good enough for coal. Let's look at, let's see, one of the oil stocks that I still liked was CPE. And you can see here, it hasn't totally gone crazy. The high jump is only 39.80. You can see the relative strength. coming out of a squeeze. In fact, let's just drop down my watch list. Let me show you a couple of stocks that I like to the long side and the short side. And we're at 30 minutes. It's time for me to finish. So, Scott, weekly. Buy watch list. AAWW. Why did I like this stock? It's right up here against the 50. So it's going to have to break above the 50 to get my interest. It's in an early EMS signal. I like what the relative strength is doing. Its high jump is neutral. Notice that the fast trigger just turned positive. So this is one that I'm watching. I found this to be interesting. You could pick one of many gold stocks. This is one that has not run too far yet. This is AEM that has to break above its 200-day moving average. Anthem is a healthcare, it's a payer mostly, but they have data and other things, and you could see it's had a very nice run. If I look at the weekly, you could see it's had just a crazy run. You could see the strength on Dr. K's weekly indicators. This is positive weekly seasonality. And why new wealth signal, new EMS. And on Wednesday, it had 3 dots out of a squeeze and a PSAR reversal. Cleveland Cliffs is an iron ore stock. Iron ore stocks went crazy this week. I think this one could go higher. Look at the relative strength separation there. Boy, there's a lot of stocks, despite how bad the market is, but so many of them are in the energy complex. I already own FANG, meaning Diamondback Energy. We've talked about that before. Little Flag broke out again on Friday, still looks strong. FCX, Freeport-McMoRan. I remember years ago they bought a bunch of oil assets. And I was wondering, what the heck were they doing? Well, I guess they're probably paying off now, but this one broke out. Most people think of it as a copper play, but it has a lot of different assets. Some of these are hopes and prayers. First Solar is not a stock that looks viable right now, but solar stocks usually do well with energy. This thing is sold off hard, and it had a green candle low with its high jump down at the bottom. I'm watching it. I'm not buying it yet. And so I have a list of stocks that I'm interested to the long side. Range Resources, a gas play. Look how this thing is broken out. Natural gas play. Just an incredible market in the right spots. If I look at what's not the right spots to be long, and I look at some of the ones that I thought were potential shorts, a lot of expensive tech stocks. Align Technology, this one's already in a downtrend. Remember, I like the weeklies. Let me make this where, okay, pause this for 1 second and clean this up. I like the stocks to have run up back to their moving average in shorts. This one has already dropped too much. I'd like to see it move up before I short it. I also see positive seasonality. Adobe, I already pointed out to you. Again, it's already had a big run down. Perhaps it needs to run back up some. Is Amazon ready to be a short? I'd rather be short it than long it with a target of the 200-day moving average, but it too has positive seasonality. So we're going to have earnings coming up soon, and you wonder if that's going to save it. Google, another one that looks like it's ready to roll over on the weekly. Long way down to that 200-day moving average. Let me fix this. This is the weekly. If I look at the daily, you can see it's broken down here. I think this one looks interesting from the shorts. These are some big cap tech stocks. I usually start at a high price and work their way down until I get about 15. And I don't go and short all these. Certainly do not short all these. But I build this as a watch list. I might short some. But what it really does is it tells me if this market turns and if I have to reevaluate where I'm pointing. I think showed you plenty, probably more than you needed to know. Be careful out there. We know that the futures are tough. We know that this market has been a challenge. And what better time to have a Wealth 365 event so you can hear from a lot of experts. Rob and his team usually have 30, 40 speakers over 5 days. Again, I hope to introduce you to my marketplace package. I showed you some of the customization on the scanner. For those that are wondering why isn't it out yet, simple. I didn't have this level of customization before. And what I really want it to be is I want you to be able to have your list that you draw from. And I will, for the ones that join and participate in my education, I'll include lists of stocks that I'm following. And I want you to be able to come in here and set this to your taste here, where bullish dots, I'm going to look at a bullish scan right now, greater than 1, bearish, less than or equal to 1. Leave it in a squeeze, make this bullish or no signal on the Bongo Weekly, and bullish or no signal on the EMS. And let's hit apply. And here I took a list of stocks that I'm going to be watching. There's about 600 or 700 stocks. And right away, these are the ones that came up. And lo and behold, Canadian National Railroad, we looked at this first. Covetis, or Cenovus rather, Energy, a inexpensive or lesser expensive oil exploration production play. Fang, a more expensive. KDP, Keurig, Dr. Pepper. Sideways move. Is it ready to break out? And is there, what I don't know on this stock is there any kind of M&A when I see a sideways move? But it certainly looks like it's ready to go higher. NOV Inc., the oil platform manufacturer. Progressive Insurance, despite the fact that AIG was a bearish on wealth scanner, a lot of the insurance companies look like this, breaking out above the 50. Momentum and breakout signal, relative strength turning up. That one looked interesting. And here's Schlumberger, one of the oil service stocks. The point of this is by setting my scanner here, I narrowed a list to 1, 2, 3, 4, 5, 6, 7 high value stocks instead of this. I'd rather look at 7 stocks than all that list. Good night, everybody. Have a great week. Trade safe. Be careful.